If you are getting ready to go on Medicare and you want to continue to work past age 65, and you have a high deductible health plan at work with an HSA, you probably know an HSA is a great investment tool. It's a great tax advantage. But there's certain rules once you're ready for Medicare that if you mess them up, you're going to create a lot of headache for yourself at tax time via tax penalties. So the federal rule says if you want to continue to work past 65, you can continue to contribute to your HSA, your health savings account, as can your employer. However, you can't have any other type of health insurance, and they consider Medicare Part A and B health insurance. So if you signed up for Medicare Part A and B, A or B, you cannot continue to contribute to your HSA. So you're like, ooh, dang, that's me. Okay, well, go ahead and terminate Medicare A and B. The form is on our website, themedicarefamily.com. You go get the form, you can terminate Medicare A and B, and you can continue to contribute to your HSA, so can your employer, for as long as you are employed. However, I need to know when you're going to go on Medicare. Are you going to retire at 66, 67, 68? And what I get from people all the time is, I don't know when I'm going to retire. I'm going to work as long as I enjoy it. And I might wake up tomorrow and decide to retire. And I kind of love that attitude, right? However, as far as an HSA goes, I can't have that. You need to be able to stop contributions to your HSA 6 months before you sign up for Medicare. 6 months. So I really need you to not wake up and go, I think I'll retire tomorrow. I need you to wake up and say, I'm going to retire in 6 months, so that you can make sure that neither you nor your employer made a contribution in the 6 months before you sign up for Medicare. Now, this seems random, right? And I have many insurance agents that are all confused by this. The reason this 6-month rule is because people were retiring and they were not signing up for Medicare in time, and then they were having claims. And so the government said, you know what we're going to do? When you sign up for Medicare past age 65, we're going to retroactive Medicare Part A back 6 months to try to help those people in case they had made a mistake. So the government was trying to be nice to help you, but if you have an HSA, it can actually hurt you because it can disqualify what were supposed to be tax-free contributions and now make them taxable. So you want 6 months before you start Medicare, you have your last contribution. So if you don't know when you're going to retire, I tell everybody, try to make all your contributions in January at the beginning of the year. I don't know if your employer will play along with it. Sometimes they only contribute monthly or whatever they want to do, but maybe they'll play along with you if you're at retirement age. Everything goes in January. That way you know, get 6 months till June, and then you could retire anytime past June. I have another video on what you can actually use your health savings account money on. You can find that on our website, themedicarefamily.com. But just to summarize it for you, you can use it for qualified medical expenses, for deductibles, co-pays, co-insurance. You can't pay your Medicare supplement premium. Everybody knows that. And you can reimburse yourself for Medicare Part B monthly. You can't pay for groceries, toiletries, vitamins, supplements, cosmetic procedures, qualified medical procedures. So again, go check that video out if you have more questions about a health savings account and Medicare. If you like this video, you might really like this video. Check it out. And we'd appreciate if you subscribe to our channel so you never miss a great video. We put out one every week. Check in the description below this video for a link to our cheat sheet on Social Security and Medicare. And you can also give us a comment if you have a specific question. Always feel free to call us or email us at the Medicare Family.